to build its manufacturing capacity. That includes foundry that Rich asked. So going forward, I do think that Intel's ambition, especially with the new CEO Pat Gelsinger, he came from technology background, developed 486 chips, so he knows his tech. He wants to do both, building product for Intel, also build foundry business for non-Intel products, basically competing not TSMC, maybe the UNC, maybe the Global Foundry type of business. That's why I think that because of political situation with China, US want even more manufacturing back to the US. Intel is a key company, take advantage of all the help from the government.
All right, Kirk, thank you so much for your time. Kirk Yang from Kirkland Capital. Coming up on Bloomberg Markets Asia, we break down the blowout quarter it's been for the big banks on Wall Street. That's next. This is Bloomberg. Wall Street banks are in focus today with strong earnings from Goldman, Wells Fargo and JP Morgan, pointing to another roaring quarter for traders and investment bankers. Loan activity slumped, but bankers are taking that as a sign of economic strength. And Bloomberg's Sue Keenan joins us now. Sue, one analyst thought there was only one word to describe Goldman's numbers, and that was wow.
Yeah, Goldman traders blew away the highest earnings estimate by $2 billion. Stellar gains at both JP Morgan Chase and Goldman had a lot to do with that Reddit-fueled craze over meme stocks, the fervor over SPACs, and you also had both banks and Wells Fargo releasing reserves for loans that never materialized. There had been a warning that the good times could not last. It looks like profits were outsized, surprising everyone. However, JP Morgan did report that loans were down some 4%, a 14% decline in credit card loans. Wells Fargo also reported a slump, 15% in loans. That has raised concerns. You did see JP Morgan stock close lower. Concerns about what this means about loan demand going forward, although the banks tried to put a positive spin on it, that there's pent-up demand that will probably pick up in the second half. Back to you.
Thanks, Sue. Up next, did you next hear Richard Byworth on all things crypto and that Coinbase IPO?
cryptocurrencies, they're really vehicles for speculation. No one is using them for payments, for example, like the dollar. What they're using them for is to speculate. It's a little bit like gold.
Expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is.
I believe that most of the people who are most deeply invested in this company, in this economy, in this new crypto economy, are really long-term thinkers about what's going to be possible. And I think this is going to be a really interesting one for decades to come.
This was clearly a very successful direct listing. A lot of investor enthusiasm. It was a watershed day for Coinbase and for crypto in general. So I think when you look at the price action, there really is just a tremendous amount of enthusiasm.
Well, a whipsaw debut indeed. Coinbase finally going public via a highly anticipated direct listing, shunning the traditional IPO market. Shares fell almost 14% on their Nasdaq debut, but the listing marks the latest step in crypto's march to the mainstream in what's become a $2 trillion industry in less than a decade. Let's get more with Richard Byworth. He's CEO of Diginex, which until Wednesday was the only Nasdaq-listed company operating a crypto exchange. So, Richard, you've got some competition now, but I guess does this volatility we saw in Coinbase just kind of show you the risks, but also the rewards you can see when investing in crypto exchanges?
Yeah, it was very interesting to see the price action last night. Bitcoin started to pull back, and then you got a very exaggerated move from Coinbase stock, and actually that pulled down the rest of the sector. So the sector that had been largely up on the back of the Coinbase news, around 10% on average, ended up the day around down 15%. So as you say, volatile day for all stocks in the sector.
What does it mean more broadly for the sector, though, particularly when we look at the volatility and I guess some of the government's requirements that are needed here for a Nasdaq listing?
Well, yeah, I mean, when I say the whole sector, I'm talking about mining companies, I'm talking about other ecosystem plays that are listed outside of Nasdaq, but Nasdaq particularly has a level of governance requirements that is going to be quite a large barrier to entry for most crypto companies. Sarbanes-Oxley being a core requirement around processes, protocols, and governance that I think will be a stretch too far for many of the nascent companies in this space.
Sorry, Richard. I also wanted to ask you in terms of what we're seeing with Bitcoin. We did see that pull back a little bit from the rally, but you've got a call here for 175,000. Our question of the day we're asking all our guests is, though, when do we see Bitcoin get to 100,000?
I think you could actually see Bitcoin at 100,000 within the next 3-4 months. We've been bumping up against 62,000, 63,000 for some time now. Briefly yesterday we crossed and touched 65,000, new all-time high. And I think that the Coinbase listing is actually going to provide an impetus for people to start to pay more attention to the asset class again. And I think that 100,000 will be well within reach, which is only really another 70% upside from here when you